Many of you have the same question. If you can only buy one Singapore bank, which one would you pick? So today I'm going to dive into the three banks again since they have all released their full year results. But this time around, other than comparing the numbers, I am also looking at their future outlook as to perhaps why their share prices are not moving even though they announce higher dividends. With that, let's dive in. But before that, I would like to do a quick shout out for my SkillsFuture approved investment workshop. Okay, so this workshop is called Intelligent Investing in the Era of Disruption. Okay, so this course is up to 70% subsidized by the government, and you can use your SkillsFuture credit to deduct the balance. On top of that, this is also accredited by the Institute of Banking and Finance. Okay, some of the course highlights are that we're going to leverage on AI tools, okay, to teach you how to construct your portfolio, get stock ideas, and also help you to save time, especially when it comes to stock analysis. If you're interested to register your interest, you can click on the link here or the link in the comments down below. With that, let's jump back to the 8 dividend stocks. Look at their FY 2023 results, okay, the financial highlights. Number one is the core net profit, okay, on a year-to-year basis. We can see that the three banks are performing around the same, 26 to 27% year-on-year growth. Okay, that in fact it is quite impressive because they are already so big, right, in Singapore. Okay, the next one is net interest margin. So we can see that they are also around the same, but OCBC is slightly higher at 2.3%. Cost to income, so how much are they spending as opposed to how much they earn for income. Over here, DBS and OCBC is around 39%, but UOB is much higher at 43%. Next one, we look at return on equity, the financial ratio that Warren Buffett always uses to, this is his so-called favorite financial ratio lah, to measure how well a company is being run. So over here, we can see that DBS is the highest at 18%, outpacing UOB at 14.2% and OCBC at 13.7%. Next up is the dividend yield. Okay, we are all very interested because banks pay very good dividends. And for DBS wise, they are like way ahead at 7.5%. This already includes the 1 for 10 bonus share. Okay, so if you exclude that, that will be around 6 plus percent. Not very far off from UOB and OCBC, around 6%. Okay, so the deciding factor is actually the DBS one bonus share for every 10 shares you hold. Okay, and lastly is the growth prospects. Okay, so we can see that DBS is expanding in Taiwan by acquiring the subsidiary in Citibank in Taiwan. Okay, so we are likely to see strong net new money inflows, the wealth management, and also the DBS, the IT services being disrupted, and the management is taking pay cuts and working on better service reliability going forward. Okay, next is UOB. Okay, UOB is very straightforward, is expanding aggressively in the ASEAN region by acquiring all the city branches, okay, all the Citibank, what you call it, franchises. Okay, so the integration has been completed for Malaysia and Indonesia. Thailand is up, is being completed by the second quarter this year. And in particular, right, I just want to highlight that the credit card fees of UOB actually increased 66% year on year. So this is really astonishing, right? I mean, maybe because of the upcoming concerts, the Taylor Swift and Ed Sheeran. I'm not sure, but I do feel that they are running a very good job for their credit card business division. And for lastly, for OCBC, okay, they have planned out strategic acquisitions, okay, of the insurance arms in Malaysia and the Bank Commonwealth in Indonesia. So this is currently pending regulatory approvals. And before we get into their price to book valuations and the outlook ahead, I would appreciate it if you can help me to smash the like button, subscribe to my channel, and ring the notification bell so you never miss another update on all these stock insights. And in exchange, here's a financial meme for you. And now let's come back and look at the valuation in terms of price to book ratios and the analyst target prices. For the PB ratio, DBS is currently trading at 1.4 times, higher than UOB and OCBC. But that is a given because of their higher return on equity of 18% as compared to the other two banks. Next is the target prices. All right. Generally, I just put the numbers here, but generally we look at the potential upside lah, over a 1 year period. Okay, so DBS is around 10%, UOB 14%, and OCBC 10%. Okay, if you want to check out all these valuations, compare it with other banks like maybe US banks, or even China banks, okay, you can do it by this platform called Simply Wall Street. I've extracted the data from Simply Wall Street. It's one of my favorite investing tools. Okay, you can sign up for a 14-day free trial over here. Okay, I will also put the link down in the comments. So if you want, you can sign up over there. And last but not least, I will also put this Excel sheet inside Patreon. So I will also leave the link down below. If you want, you can go and download and also play around with it yourself. Okay, now for the outlooks of the three banks, I've taken the liberty to extract all these outlooks from their presentation slides. For OCBC, you can see that they are slightly more pessimistic in the sense that they are saying that the global growth slowdown will be anticipated for this year. Interest rates will trend downwards in the second half 2024. UOB wise, although there is low single digit loan growth, they are expecting a double digit fee growth. So total income will still see a positive growth. Okay, and for DBS, all right, they are also similar to UOB in the sense that they are saying that although the net interest income will be slightly lower at 2.13%, but their fee income growth will be a double digit one because of the acquisition from the city Taiwan. Okay, be it the cards or the organic growth in the spending. Okay, so but ROE is expected to trend downwards. So last year, 2023 is 18%, but they are expecting the ROE to come down to 15 to 17%. So all in all, I would say that 2024 outlook will be subdued, or muted for the three local banks. Okay, and now for the $1,000,000 question. Out of the three local banks, which one would I pick? First of all, right, let me just say because DBS is giving out such a good, dividends increase to 54 cents per quarter, and they are also giving a one bonus share for every 10 shares. So it's like a no-brainer. So DBS will definitely have a very high dividend payout that is fixed. Okay, and but if I were to look at it over a long term, I will still stick with UOB, which is the same as what I shared in the previous video, because UOB's focus on the lifestyle deals, like the pre-sale tickets for Taylor Swift concerts, and all that, right, will lead to more cross-selling opportunities in the future. And I believe that DBS is more like a household bank in Singapore, and I do like how UOB is expanding in ASEAN because ASEAN is a underdeveloped region and then is growing very fast because of the US-China trade war, and all the companies are shifting to ASEAN countries to develop their economies, build factories and things like that. So going forward, there will be much more growth opportunities. I would say that there are more growth opportunities in the ASEAN region, which will benefit UOB. All right. So this is my take. Which bank would you pick? Let me know in the comments down below. And last but not least, don't forget to like, share, and subscribe to my YouTube channel. And I will see you in the next video. Thanks for watching, and bye.